welcome back to the final hour, more like final half hour today. I just had a webinar run long, so sorry about the late start, but it's 3:30 p.m., April 24th. Markets are up today. They've pretty much been up since the start of the morning, opening up around 53.80 on the S&P, rallied all the way up towards 54.85. That was enough to actually poke the highs from April 9th. So the market right there was the 54.81 high, and we just poked that by a couple of points today. The lines I have in my chart right here, this was earlier in the day, my daily profit play. What started out as a sell side and a sell side, so winning side here, losing side here, took a net loss on that daily profit play, but ended up positioning for a little butterfly, which ended up paying about 40%. I grabbed 35 cents out of a 65-cent debit, so actually a little bit higher than that, about 53% profit on the trade. It had it run to like 54.90 or 5500, which was my pin price. This could have probably turned into like a dollar, maybe more. I actually saw this at one point trading for about $1.40. That was when price was at the high for the day. I didn't take the profit there, but it was fine. I still closed out for a little winner, and then a trade down here that is for 50 cents. So net, I'll grab an extra 85, I guess 85 cents on the day. It helps mitigate some of the risks from the daily profit play this morning. It's fine. We are sitting here at highs. The market has done a pretty good job of clawing back. My question now is what happens next? Obviously, everyone, that's the bajillion-dollar question, is what's going to happen next. Well, I mean, I think from the technical side, right now the commentary narrative is improving a little bit, which is probably good. So getting back to this April 9th high was kind of step one. You look at all these past support levels, that would be a potential resistance and a roadblock. If we run into some obstacles, it'd be right here at this like 5,500 low. So 5,500 could be a little bit of a rejection point. But if we get above that, if we get above 5,500, there's still room for this thing to drift and melt up into these levels, right? I'm very, very cautious of 5,700, 5,800. I think that's a really challenging spot to get to with a lot of upside, but I could see us melting up to that point. Here is another key. I try to make this really clean this week. If we go low, high, higher low, higher high, symmetry could get us up into 5,700 or so, but look at the backside of the trend line, right? This could be a make or break point where the market tests the high, tests the high, tests the high. We had one high from April 9th, test and fail, test and fail, test and fail. Test today is sitting right at the same level. We actually did poke the highs from April 9th. But that trend line could still act as a major rejection. Is that going to happen tomorrow? I don't know. I don't think so. I mean, hopefully there's little to no commentary to make this market concerned. Earnings for the most part, consensus wise, has been okay. I'll find out. I'll do some more digging on that with like what the overall earnings environment is right now. We had some lookers. We have Google coming out with earnings today. Tesla had terrible earnings, but a lot of the bad stuff was priced in. It's very possible that I flip Tesla this week if it stays above 257.50, which right now it's at 256. So this goes out to an expiration tomorrow. So overall, pretty good P&L on the day. Just nice green on the day. Portfolio is back up about 4+% for the year, and I'm happy with that. I'd obviously like to be a lot more profitable, but I'll take the little victories and just continue to grind through things. Should have a lot more profit to go. I've got some waterfall income trades that are doing really well. Overall, those trades should. I'll just mark some of these up. So SPX, QQQ. Right now, this is up about 71%. Honestly, I might just take the profit and move on rather than waiting for full profit. I mean, to get an extra $20, I'd have to wait 57 days. I might as well just take the profit. I think I'm going to. So I think I'm going to do that now. I'm going to close out a bunch of winners here. So let me see if I can close this down for about 20 cents or less. See if I can get out of here for 20 cents or less. 21 cent. Come on, give me just a little bit better fill. You jerk. 22 cents. Let's see. Actually, you know what? I'm going to let this sit. So here's why. If I get through tomorrow and the market just stays like relatively calm or sitting near these highs, or maybe even has an update tomorrow. If it has a down day, then obviously that's fine. But all these trades for waterfall income are positioned for, we'd have to make fresh lows and drop like 15 to 20% for me to be threatened on these trades. But if I sit in the trade and we're resilient at these current highs and we stay at these current highs and we go through the weekend, that time decay is going to work in my favor, and I can take probably a bigger profit chunk out of that going into next week. So Qs, I've got, trying to think, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 13 trades. So we'll go 13 trades. So $50, 13 trades. So there's 650 on that QQQ trade. All right. And then I have the SPX trade. This one that is hopefully going to look pretty good for a winner of 55 cents times 13. So that's another 715. Writing this down. SPY trades, a little bit busier. This one's up 74% of profit. This one's up 63% of profit. This one's up 68% of profit. Net, I'll just say 51, 65, and 48. We'll just go 50, 50, $1.65, another $1.65 times 13, another 20. Is that right? $1.65, 13 times, hang on a second. $1.65 times 13, 21.45. Okay, and then also on XSP, this one for 58 times 13, so 754. All right, so my point is, if I take these trades and I can let these decay over the weekend and they maintain this percentage or maybe a little bit higher, I'm probably going to be able to protect a majority of this. So I've got about $4,200 in likely profit. If I can grab, let's say, $3,000 of that, $3,500 of that, and rather than waiting until June or waiting until mid-May, I'll just take the profit and move on. I don't think that's a bad way. So yeah, waterfall's looking pretty good. I think a lot of traders in the service are probably looking to close out profit already, or maybe just waiting for my guidance, which I said yesterday I'm going to do a video. I still meant to do the video today. It's been a busy day. I've had like little to no gaps. So I will still get a video out for waterfall income to review all this stuff and just explain why I'm going to wait for at least the weekend. I think the market may, reject off the trend line. That's going to suck though. I'm not going to lie. Like if you see the SPX tomorrow and we have a down day tomorrow, don't be surprised because we're sitting right at this trend line. So if we poke 55 and we have a strong rejection, I just hope that it's not a nasty, awful, horrible red day. That makes sense? Like, here's an example. If we hit 5,500 tomorrow and we reject and we get a gap fill, that's a crappy day. And we're gonna stare at this chart and say, well, the bears still have control at these key resistance levels, something to be mindful of. Right? But if the bulls can get above 5,500 and this melt up can continue, this could be good. The narrative has been softening on trade war. I read a tweet today that I thought was pretty funny. Basically, I'm charging my phone right now. Basically, it said something to the effect of, Trump says this, China does nothing. Trump says this, China retaliates. Trump does this, China escalates. Trump does this, China does nothing. Trump does this, China does nothing. Art of the deal. Look, nothing is really solved right now. The government is basically jawboning how good these deals are sounding and happening, but to my knowledge, I'm not reading that like anything is solved. We still have tariffs. They're 5 to 10 times more what they've been for most countries for the last several years. We're still trying to work out something with China. I have no idea what it becomes, and the market doesn't know either. So, as it is right now, it's like all of the kind of self-inflicted damage and uncertainty has been repaired, which is kind of nice. I mean, this was just the broader base rotation that needed to happen, and we're kind of right back to that starting point. But if tomorrow leads to a rejection, I think that's going to show us again that the bears are actively defending key levels, and this is a sell the rally type market right now until something changes. Now, we could still come back down into this low. We could still have a big range, but until this trend line is broken, I wouldn't get overly excited about this market. If we have a move up tomorrow and then Monday next week is a nasty like evening star candlestick formation or some type of rejection, it's like just be cautious. Like understand that there's resistance right here at this 5,500 handle. If we get above it, looks a little bit better. We can clear 55, get on the right hand side of the trend line, make a little run up into the 200 moving average, Maybe it's a noisy spot, but between 56 and 5700, maybe up to this kind of trap level around 5800, I'm very curious to see if the Bears come back in and play. If the Bears reject here or the Bears reject here, I got to be ready for that. At the top of the hour at 4 p.m., I'm going to do a masterclass for my crash insurance students. We'll talk about that. So I don't think I need to add anything right now for fresh hedges. We've already put one on for last week, and that's looking to see if price is going to come down and retest the lows by October. Also out to December, even considering something out to Q1. But if we get another melt up, then maybe another hedge here, or definitely a hedge up here. Okay, so we'll talk through that in the next 20 minutes. Did you look at BTU? No. I mean, you're talking earnings to me. Pfizer earnings are after market next week. So dividend announcement. Okay, fine. Dividend announcements next week at 43 cents. It's out May 9th. BTU. I wouldn't touch this thing with a 10-foot pole. I mean, why is this stock down 67% with lows back here in 2020? They're down to $3. Not even interested. I mean, what good does this do me if I'm buying a stock at $13 that potentially can go down to $3 with maybe some short-term upside? Not that interested. So, I mean, if I'm interested, it would be literally at COVID lows. I'm not calling the bottom here. I can look at the fundamentals and see what it says. Is there any hope to this thing? Peabody Energy, Snowflake wise, looks okay. Way below estimated value, good value compared to peers. Forecasted decline or earnings forecasted decline, not great for the next 3 years. Profit margins are lower. Dividend track record sucks. So, dividend at 2.4%, which is even exciting. And it's unstable. That's not good either. So let's see price to earnings, 3.9 times. I mean, it's a value play, but we were a $3 stock. Now it's $12. Fair value is 40, but I have no idea. I mean, so short term, I mean, I don't know what you want to do with this. This isn't enough to convince me to get long at all. Not with a COVID low that's way, way, way lower. So honestly, I would say if you're interested, maybe could be this simple. I don't even like that trend line. I would adjust the trend line somewhere out to maybe here. I don't know, man. Maybe a trend line there to stay out of the noise. If this keeps, I mean, here's a good way to look at it. If it keeps grinding lower, grinding lower, grinding lower, grinding lower, maybe a falling wedge. But on the right-hand side of this trend line, sure, with some patience to execute, then yeah, maybe with some confirmation, it'll make it a little bit better. But I think you're guessing at a low here that could clearly go lower, and yeah, not that interested. So that's my thoughts on that. Back to the indexes, SPX. Any questions on that one? Tomorrow's going to be an interesting day to see how potentially bullish or how sustained this little rally is. I would like to see the markets hold above this 5,500 handle. If they can't, that's a bad sign that the bears are still right there waiting to kind of sell and fade the rallies. XSP watching, SPY 546. I think I might have a smaller. I think I've got a double up here. It's going to be down like maybe $300. Let me try and find out. SPY. So max risk on this one is about $1. No, max risk is 333. It's down most of the profit. We'd have to have another push higher. That's a tough call. We'd have to have another $8 push higher tomorrow. I think I could wash a little bit of this risk, but I'm trying to think. Worst case, I mean, I'm saving myself about $70 on the trade. I don't think we're getting to 554 tomorrow. I'm going to go ahead and close this one down. So let me look at some double ups here. I've got some SPY trades. I think I might just take the small loss. So box spread, that's fine. I need to go SPY. So have some shares. This one. So taking a small loss. I mean, I like price has to get to 557 for this to be break even. That's another, $11 up for tomorrow. I'm just going to take the small loss. I don't think we're going to get there tomorrow by expiration. So I'll take the instead of taking extra, how many trades do I have on here? It's probably going to save me like $500. I'm fine with that. So close 60. Let's go 67 cents credit. 66. I'll try to trade the mid price. This should get filled. You turds. 65. Come on. I've got to get filled at the bid price. Boo. All right, double up. Closing at the bid price at 64 cents. This one close out at 65 cents. Hopefully that's the bid price getting filled. A-holes. 64. All right, I'll just do 64. So I'm saving some risk on the trade. I'm still taking a little bit of a loss, but I'll get out of this trade. So close at 64, 65. That's the bid price. Come on. 65. All right. Penny for your thoughts. Close out here for 65. 64 it is. Okay, so get this one updated, closing these all out, 64, 64, and a couple more. 66 bid price, all right. Got filled at 66. 67 bid price now. Look at this. Saving a couple of pennies. Oh, maybe not. Back to 64. Come on. Filled at 64 and a couple more. Filled and filled at 65. All right, that got filled. I need to update that. That's a double up trade. Double up trade management. That is double up for, oh, you idiots. VZ, I'm still watching. Where's VZ at today? Hopefully up. SPY, trade 77. So trade number 77. SPY. Buy 554 call. Buy sell 560 call. Entry 3.33 debit. Closing for 65 cent credit. Accepting a loss, but saving 65 cents in risk. SPY would need to run. We'd have to run basically 10 points higher on Friday to close for break even or better. Low probability. And with key resistance at 5,500 or 550 level, it may not get there. So I'm closing for a managed loss. All right, that trade's done. So this closed out for 65 cents credit. And then Verizon down $5. You stupid turd. I'm just gonna take a break even here. I've still got a liquidity level on Verizon in case it doesn't cooperate tomorrow. I mean, this price isn't really doing much. I'm not asking this thing to surge tomorrow. You know, market makers for a Verizon move tomorrow is maybe 37 cents. It'd have to be all the upside for this thing to pay profit. So I'm just going to take the small break even. $9 loss. Okay, big whoop. Close out for 41 cents, hopefully. 41 cents. So that's a Newsbreakers trade. Newsbreakers, trade management. VZ. Oh, wait, actually, that's double up. My bad. So VZ newsbreakers, we had 2 for 2 this week. We had a Tesla win and a Netflix win. Trade number 80. That was a buy 42.50 call and a sell 43.50 call. Entry 50 cents debit. Closing for 41 cents credit. Taking a small 9-cent loss. Expected move for Friday is 0.37, and it will need to all be up for this trade to show profit. Oops. Come on. Okay, trades are done. So this one, 41 cent credit, taking a small loss. Alrighty, let me check my SPX today. So this one, butterfly wise, trading up to 9. I mean, I'm okay with it. I closed out for $1. It offered like $1.40. Now it's back to $1. The last 8 minutes of trading. So if we were closer, like here are my strikes. If we were closer to 54.95 or 5500, then this would be, get into some bonus trap area. It is the final 8 minutes. Like maybe this market does surprise us to the upside. Maybe 5500 can be hit, but it's coming in like right in the final minutes of trading for that butterfly trap. So I'm already out of the trade right now. You can see it fluctuating, $1.05 credit, $1.20 credit. If it gets above, so if it gets greater, this is what's kind of nice about the butterfly trades is if it is greater than 54.90, then we start the profit trap. That would be this look on the butterfly. So 54.90 is right here, 91, 92, 93, 94, 95, 96, 97, 98, 99. This is 5,500. Even if it goes past 5,500, all these are dollar bonus traps. The hard part is it's the last 7 minutes of the day. And if we go down, this is a worthless butterfly spread because my risk is right here. So that was a 65-cent risk. And right now I would be offered up a little bit of profit. It's not perfect. I'm still getting like a 50 to 60% winner. But the ideal trade is trying to get this thing in that profit trap at the very, very end of the day. And that's challenging to say the least. So I'm just taking the winner, 60 cents for $1 and then 50 cents for full credit. So 50 cents becomes 0. So net, I'm making about 85 cents just to close up. This trade I'd taken a small loss on. That's fine. Let me look at some other expirations on the day before we go. Last couple minutes here. What else do I have for this week? I did add some trades today. I added trades on IBIT, added trades on Intel. Intel has earnings after market today. Added a trade on AMD this week. We have earnings on Google and Intel after market today. I did put in a pending order on GLD. Basically it's a ratio spread. It's out to December. I didn't get filled on it. I'm looking to see if I get a better fill, so I've adjusted the pending order. So keep a close eye on that one. Well, I guess that SPX wants to do something. Just curious. Now it's trading for $1.65. Now it's over $2. You see what I'm saying? Like we're getting very close to getting inside that profit trap within that chain. The last 6 minutes of trading, that's where all the potential butterfly magic happens. Is if we get into my trap by the end of the day, it does work out pretty nicely. So it's up to $1, $60, $70, $80. Which, if I was still in the trade, now it's down to $1. Holy crap! It's down to see. I mean, it's just so sensitive. So anyway, that's the good and the bad with the butterflies is you can get a potential huge profit trap, but it's also very difficult to catch. And I usually don't like to take this and cash settle it at the end of the day, like waiting until 4 p.m. to let it close. Sometimes good and bad, but you never know. You never know. Good to go out. So give some traders a chance to close those things out. They can still be closed out tomorrow as well, but Newsbreakers was a winner, double up for Verizon and SPY. Those trades are closed. Okay. Nice Baja Pete. Yeah, butterfly up 100. I mean, good. Take it, dude. I mean, look at it was up 100%. Take it. That's not a bad win. You know, I mean, literally one point I'm talking through. You got $1, $20, $30, $40, $50. Take it because you're waiting to see like in the last 4 minutes of trading, does it come up and actually hit above 54.90? Does it get to 5,500? Maybe it does. There's still a potential late minute squeeze here. Like these last typically 5 to 10 minutes of trading can be a little crazy. It could push right up to 55 and give you that awesome trap. It could also drop down below 54.90 and you're losing. Like that's how close this is. And look, if you trade butterfly spreads, if you have success with butterfly spreads, most of the success is going to happen by taking your 100% winners. That's where most of the success lies, where you get like a 55 to 60% win rate at 100+%, and then occasionally you'll get the profit trap, and that just gives you a bigger surplus. And so if traders like the butterfly strategy, most of the time it's turning the low risk trade into a 1-to-1 or better, and the big profit trap is few and far between. But when it's there, they're amazing. I mean, taking a trade that cost me 65 cents a contract that could potentially pay $900 is very enticing. But you can see in real time that it's challenging to get. You know, so had I gone wider, if I move this to 54.80 to 55.20. This would have been a slightly different look. This trade would have probably cost me like $1.50 to $2 to take, but right now it's showing $8 of profit. So I mean, to go a little bit wider, pay a little bit more, like that's not a bad trade. You just give yourself a wider net. So I mean, food for thought. Like I wasn't super sure if we're going to get to 5,500 today, but this could have been a better trade. You know, because look at above 54.80. I mean, we're trading at 54.87. You've got $7+ of credit. So every dollar that's above 54.80, that's $100 per contract. And but you have to go 20 wide, and that trade's going to cost a little bit more from when I took it earlier today around 11:15 a.m. So I don't know what that trade would cost me. Even here, even a 15 wide, maybe. So I'd be somewhere between there. I mean, I rarely do a 5 wide, but if I do like 10, 15, 20 wide, it's going to cost me probably anywhere between $50 to $200. But there's always some decent profit potential. Okay. All right. So Qs, let's talk Nasdaq. Nasdaq is also right back up towards the high from April 9th. That high is 467.83, with today's highs at 467.66. So the Nasdaq didn't quite hit the highs. The S&P did hit the highs. Here is a pretty simple way to look at the Nasdaq. Take your trend line right there. Now, this makes me wonder, with this candle on the right-hand side of the trend line, is the Nasdaq able to clear this high and go from low high, higher low, higher high? Okay. Is anyone familiar with a Gartley pattern? It's a harmonic pattern. If you go X to A, B, C, D, I could see this being a pretty good technical setup on the bearish side of the S&P and the Nasdaq. So basically, you have this massive swing. You have a 1, 2, 3 recovery, and that becomes a harmonic pattern, and you look to short that, and you take it right back down to this level would be your profit target. So if we see a short up here, that's a good profit target, and obviously it could run a little bit more if the bears are more inclined to take this market down. So anyway, that's what I'm going to be watching. I mean, I'm trying to be like really clean on the technicals and be kind of call out some numbers, look at the technical patterns. I mean, this is the easy part. If the market goes higher, it's easy. It's easy. What I want to be braced for is I'm not getting super aggressive in here. I'm really not. Doesn't theta decay work faster for your 5 wide? No, and also, I mean, it's the same. It's just super sensitive. A 5 wide is dirt cheap, but it pays you like it'd be like a 20-cent debit for maybe a $500 profit if you're dead on. The hard part about that 5 wide is it's such a tiny little window to be right. And case in point, look at what happened to the trade. This trade, it actually, I mean, if you took it all the way to expiration, you would have lost. right? This is worthless. So even the 65 cents that I had initially that offered $1.40, $1.50, $1.60 as we're watching this trade, this would have lost everything. And that was 10 wide. If I went 5 wide, I would have lost, even if it was a 20-cent debit, I still lose everything. A 15 wide would have possibly offered up, not even. This would actually lost everything. Like, geez, you had to go 20 wide to make any money today. And I don't know what it costs because I usually don't look immediately at 20 wide. So point is, butterflies are great. It's high reward, low risk. It's one of the few trades out there for, short-term to long-term trading that they work very, very well. But man, you got to manage them closely. And a lot of times, like I said, traders that I know that are very successful with butterfly spreads are 100% take profiters. Like they hit 100%, they double they go 1-for-1 and they take the winner, they take the winner, they take the winner. Okay. If you want the profit trap, you got to wait to expiration. And then you wait to expiration and it's all the way to like the final 10 minutes of trading for expiration. It's difficult, right? So, I mean, theta decay is going to work on a 5 wide, 10 wide, 15, 20 wide in the final, 5, 10, 15 minutes. It's all going to be very aggressive. So, all right. I have to go here in just a couple of minutes. Michael, you've had enough comments today. I feel like you're a bot. Maybe you're not. But Pfizer at 22.78. Earnings on Pfizer are next week. I do have a trade running in Pfizer. It has been one of my picks for a while. It's mostly a dividend play. I do have some shares of it, but here's what I have exposure wise. So I have some shares. I have a diagonal spread, so a 20 by 29 diagonal spread. I'm down on Pfizer by about just under 1%. So the whole portfolio is down about 1% on Pfizer. I'd love to see this thing stop sucking and stop sucking hard, because why are we down to $20 when this stock from a 7.68% dividend, from a fundamental outlook that is crazy value? I mean, I get it. Like maybe they trim the dividends, but we've got 70% below estimated value, earnings forecast to grow. I mean, good price to earnings ratio, good value. It's not terribly expensive. I mean, fair value $70. It's like I'd be happy with this thing going up to $30. I'm not asking for it to double and triple in price. I want to see it go from $20 to like 30 to 35 bucks. If it does that, I'll make a lot of money on Pfizer. Last year, I made about 15 grand on Pfizer with a diagonal spread. The nice thing about this trade is I'm out to next summer. So I'm out to June of next year on my long side, and I'm just selling against it. So, I mean, realistically, right now I can probably, and I should, I'll do this tomorrow actually. That just lets me take this note down. So Pfizer, what I'm going to go ahead and do is if I go into an individual account here, Pfizer, I have my long at 20 and my sell at 29. My covered call of the sell side of this trade is up 96%, and I'm just going to go ahead and take the income. So I'll take the income on that trade. I will lower the cost of the debit, and I'm just going to chip away at it. And the nice thing is I can do that 22 days before expiration. So that to me is more cost effective, and I'll lower my cost basis. I think if we get it down to, let's say a $27 call, I'll go out another 30 to 60 days, do a $27 call, trim the income down, try to make an extra, $1,000 or so if it rips to the upside. But the expected move is probably pretty light. Going out 60 days, I mean, this is expected to go to maybe $24. So even going to 27, it's like I'm not really interested in a $27 strike unless we're going out to, I mean, July is kind of bogus. Maybe August. I'll get another $200 to lower my cost basis. I can go a little bit more aggressive. My break even on Pfizer, let me calculate that here. Break even on Pfizer, 26.99 rolled to May, 26.75. So debit is 26.75. That's my total break even. So as long as I'm selling a call at 27 or higher, I've got, on whatever, 10 contracts, I've got, at least 25 cents of gains. If I can lower the cost by another 20 cents, I'll make 50 cents. I mean, even making 50 cents, I still make $500. And this is on, 13 accounts. I mean, I make $6,500. I'd like to make a lot more than that if I can. Google up 5%, freaking good. I mean, and this is what the market needs. I mean, the market finally had a backpedaling in the China-U.S. trade war talk. Stocks up. Why? Like earnings are helping. This is good. Google's a big enough company. Mag 7, top 10. yeah, I mean, if Google's up to 165 and it stays up there, and then we're coming back to this 200 moving average, that's enough to maybe get a lift to the S&P tomorrow. Maybe we clear that 5,500 handle. Hooray! I mean, this is going to give a lift. So mags get a lift over after market, SPY gets a lift after market, Nasdaq gets a lift. That's fine. And now it's like, well, what's next? We'll see where the resistance is. I mean, mag 7, if we watch this trend line, I know I have to go here for my crash insurance masterclass, but we're breaking this trend line. I mean, I'm not going to get super excited about that trend line, but if we're up above it, okay, there's a lot of resistance right in here. Right in here, there's a lot of resistance. So are we going to see the lows again? I don't know, but are we going to see a push to this area, maybe a trend line resistance level, and then a reality check where it's like, oh, this market's still not done. If this is like 2022, we could have a flush, a rally, and a flush, and we could still come down to test these lows, and that's gonna sting because this outer trend line is going to be really important. All right. So, any notorious earnings after the bell today? We had a small pump right after close. Yeah, after the market. So let me go really quickly here, and I got to jump. So I'm going to stock twits. Let me see what bonds are up today, if they are. Bonds are positive. Did this bring yields down at all? US 10-year, a little bit, not freaking much, 0.06. Anyway, stock twits after bell. Let's go to earnings today, then go watchers volume reporting after bell. So go watchers. Let's see who's watching. So Google on both sides, GOOG and GOOGL, Intel, American Airlines, Nokia, Gilead Services or Gilead Sciences, FCX for copper, Merck & Co., Procter Gamble for defensive, PepsiCo. These are all before bell. So the after bell, really not that many. As far as like the big watch list, the big volume, it'd probably be Intel and Google are the big ones today, and then tomorrow it's more of an energy play. But next week is big. You've got Apple, Amazon, and Microsoft Meta next week on Wednesday, Thursday. We finish out the month for April. We kick off May with the jobs report on Friday. We've got the Fed the following week, like May 5th is the Fed. I think it's May 5th. May 7th? May 7th is the Fed. Yeah. So we are stacking up some news pretty early in May. So we'll see. But head on a swivel. This melt up is not a bad thing. I wouldn't ask too much for a pullback. I really wouldn't. I think in my world, if this market wants to surprise us to the upside, then be my guest. I mean, I think, and honestly, I think this would be like a very stupid recovery because nothing's better. Look, I'll say this: if we go all the way to June, July with this tariff war or this trade war, and we just basically like kick it down the road, or we say everything's fine and everyone's happy now, I mean, how disruptive is this market if we go all the way back to all-time highs and all you had was essentially a cup and handle right here? If that's all we have. So, I mean, again, if that happens, okay, well, I'll definitely be at all-time highs. I'll have new fresh highs in the portfolio, and I'll probably achieve them somewhere in here. But my God, like this never had to happen. That's what's dumb is it never had to happen because we still have a trade war. But I mean, how ugly. So I don't know. I'm not convinced that we're going all the way to all-time highs without some type of check here. So again, I just want you to be mindful of there is resistance here. We could hit that level and reject it tomorrow. That would be a pretty good sign that the bears are still around. We could come up a little bit higher because we could have symmetry, which would be this. I'm going to go ahead and mark this before I go. We go to the 4-hour chart, mark this symmetry. So here, if we go from low to high, and then take the swing right there. So I'm going to put I just have all this garbage on my chart, but that line right here. Okay. So I'm going to mark that as April 7 low swing symmetry. Does that make sense? So low to high, higher low to higher high. If we come right back into that 200 moving average, if the bears are going to step in, they're stepping in either right here or right here. if the bears are going to step in. So earnings could help. Earnings could help, let this melt up continue. It wouldn't be a terrible thing. But I just don't think the bears are absolutely done yet. At the very least, even if this is going to be a larger cup and handle pattern, a pullback here so the bears can step in, pull the market back. This could be a very bullish breakout to the upside, but it's not without maybe a 3 to 5% pullback coming again. And this pullback could also get way worse because this could be a fake out bullish pattern. Anyway, I'm just going to be very, very flexible on what price action does. So, all right, I got to go. I got to jump into my Crash Insurance Masterclass. And thanks for being with me today. Kindly hit the thumbs up button, like the video, subscribe to the channel, blah, blah, blah. You know the deal. And let's do it again tomorrow. All right, thanks. Bye.